Major support for Carolina Business Review provided by Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. The South Carolina Ports Authority, a major economic driver in South Carolina, supporting 187,000 jobs and nearly $53 billion in annual economic activity. And Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services with more than 300 operations in 35 countries.
We are facing some fairly sexy economic statistics, if statistics can be sexy. First, we're experiencing the second longest economic expansion since the mid-1850s. That is since Reconstruction in the New South. And then second, if this current domestic stock market level holds, by the end of August, it will officially be the longest bull market in contemporary capital markets history in this nation. Welcome again to the longest running and the most widely watched source of Carolina business, policy, and public affairs. I am Chris William. Thank you for supporting this dialogue for so long. On this program, what are the implications for statistics like that? And what about things like the epic price of expansion in real estate, both residential and commercial? What about employment? What about trade and the trade dispute, quote unquote? On this mid-year review, we will talk with 4 resident economists about this and a whole lot more. Stay with us.
Gratefully acknowledging support by Blue Cross Blue Shield of South Carolina, an independent licensee of the Blue Cross and Blue Shield Association. Visit us at southcarolinablues.com. The Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. Barings, a leading global asset management firm dedicated to meeting the evolving investment and capital needs of its clients. Learn more at barings.com. On this edition of Carolina Business Review, Rick Kaglic from the Federal Reserve Bank of Richmond, Harry Davis of Appalachian State University, Sarah House from Wells Fargo Securities, and Frank Hefner from the College of Charleston.
Welcome to our program. Happy summer. This, I don't like to play favorites, but having you all on is one of my favorite programs because there kind of are no rules and no guidelines. Mm-hmm. This is kind of a free-for-all to some degree, exciting as that is. Let me start with something. And Sarah, we'll start with you first. Sure. So the statistics we talked about at the beginning of the program was longest economic expansion about 160 plus years, which is pretty amazing in itself. And then the longest bull market in recorded capital markets history in the U.S. That also is a pretty major milestone. Do these things surprise you, or anything around that surprise you?
In some ways, yes and no. So on the yes side, we did have a pretty tepid start to the expansion, just given the depth of the crisis, and the economy was on some pretty tenuous footing for a while there. And so it seemed for the first couple years of this expansion, we were always worried about just any little speed bump might cause the economy to double dip and head back into a recession. But one of the benefits of this slow growth has been the chance that we haven't really seen imbalances build up. And so from that perspective, where imbalances are usually what cause the economy to head into a recession, the fact that we have seen such slow growth has actually been a benefit to the duration of this expansion.
Harry, same thing. Does this surprise you at all?
I don't think so. And to some extent, I agree with Sarah. The depth of the recession, it was so deep. We came out of it, it took so long just to get back to normal. I think that's one of the reasons that this expansion has lasted as long as it has. And if we make it to next summer, it will become the longest expansion in history.
Now that's a stretch. We're talking about 12 months, right?
Yeah, it's not that long. It's not that far out there. For parts of this expansion, business investment was there, then it wasn't there. It fell off in 15 and 16. Business investment kicked in again last year in 17, and so it just keeps the economy going. And so that's what we need. We needed that business investment. That, of course, stimulates the stock market. it's now stimulating finally wages and salaries. So there are a lot of good things about this economy.
So, okay, so Frank, so that old physics axiom that says for every action there's an equal and opposite reaction.
You mean what goes up just has to come down?
No. Well, yes, but what goes up is we've had described here has been modestly increasing, a fairly shallow expansion.
So the tortoise always wins.
So does that mean that any kind of recession or slowdown will look the same? It'll be fairly shallow.
No. In fact, there are a couple things I'd like to point out. First of all is that economic growth and economies don't die because of old age. That's just, these rules of thumb, like this is the longest, we've never seen this before. At some point in history, you're going to come across a lot of, we've never seen these before. They crop up. And the second thing is, given that we've never seen this before, what kind of historical pattern are you going to use to make a forecast? So when you end up with, after so many months, this has to happen. Not too sure about this. After such a long expansion, clearly inflation has to kick in. Well, when?
Why doesn't
And who
that?
hasn't predicted that interest rates are bound to go up for the last 10 years?
And again, why? Right. Yeah, I mean, if you keep saying like a stop clock, you're going to be right about it twice.
And sure enough, one of these days I will be right. Interest rates are going to go up. Yes, and wages definitely will kick in, but we're not quite seeing that wage pressure yet either, that I've seen that much.
Okay, so Rick, as the central bank's official statistical gatekeeper to some degree, at least on this panel, how do you come down on all this?
I'll tell you, the thing that surprises me most about the length of the recession, Chris, is how resilient this recovery has been. I mean, when you think back to it and all that the United States economy has weathered to get to this point, I mean, you go back to 2010, and this is after the Great Recession. We had the European sovereign debt crisis. Right. One or two times we had the congressional default possibility in 2011. We had the collapse in energy prices and the rapid rise of the dollar 2014, the slowdown in China in 2015, and yet the economy continues to grow. As Frank pointed out, recessions don't die of old age, despite the fact that this is getting long of tooth. It's a fairly resilient economic recovery still.
And apparently they grow no matter what the crisis du jour is.
Yeah, why do you think that is? Why do you think some of those rules, when the president says something on television, you would expect one thing and it actually, equity markets or capital markets or currency markets act the other way? Why has there been this kind of decoupling of what reality has been traditionally? Well,
I don't know if it's been coupled traditionally. Equity markets respond for who knows what reasons. I mean, I'm not that one's beyond anyone to make a forecast on. But the question is, do you buy a new car or not based on what the president says? And so to the extent that a 2% GDP growth depends more on, am I buying a new car? Am I buying a refrigerator? Do I still have a job? More than what's happening to T-bills today. That part of the economy has been going along quite well all these years, apparently.
I know there's a lot of agreement, and certainly would be if we gave you the opportunity to agree on this. Sarah, the labor market, very tight, full employment, however you want to describe it. Everyone agrees that it is historically tight and all of those things. So what does employment, as tight as this is, without wage inflation and with all the other things that we have referred to so far in our discussion, how would you characterize this labor market? And here's one more thing to make it even easier. Characterize it in response to what is going on in immigration in this country.
Wow.
All right, well, let's start with the general state of the labor market and in terms of the pressures that we are seeing there. So as you mentioned, tightest labor market in roughly 20 years, arguably even tighter than that when you look at where unemployment rate is. There's been a lot of questions over participation, how much that can come back, and we are seeing some of those cyclical rebound in participation, folks coming back as the labor market has strengthened. But for all the talk about slow wage growth, we are actually beginning to see those wage pressures pick up a little bit. Now, it's not as strong as it has been in previous cycles, but that has more to do with what we're seeing in terms of productivity growth in recent years, rather than just the overall state of the labor market. But we are beginning to see things tighten up. Bringing in the immigration factor, now that has been an important source of labor supply growth in recent years. So over the past 10 years, it's accounted for half the growth in labor supply. And as we look at this fairly tight labor market, so you still have relatively weak participation, questions to how much that can come back, but you also have a slowdown in population growth. So that pool of domestic available labor is slowing quite dramatically. And so we really need that immigration to continue to increase the supply of labor and make it easier for companies to actually hire and fill all these vacancies that we now see are at all-time highs.
So Harry, in states like North Carolina that have a lot of in-migration, that rely on not just seasonal immigration employees, but as Sarah said, half the wage growth or half the labor growth comes from immigration. I would guess North and South Carolina are at least half, if not more. How is this a problem we have? Does it keep us from being competitive regionally?
The immigration?
Just in general, as we've described it?
Well, the immigration is a driving force, I think, for our economy. You know, we used to have a lot of retirees move to North Carolina, and that stopped with the Great Recession. That has now started again. So that's helping the housing market in North Carolina and helping the local economies grow faster. But immigrants are very much needed and very much a part of the North Carolina economy and have been and will continue to be.
Will it be a challenge to get the immigration policy in this country to a point where it helps the regional states like the Carolinas to be competitive with other regions?
Well, I believe that it does. I believe that we've got to have sensible immigration policy. We've got to bring in more skilled workers from all over the world, wherever they are. So we need an immigration policy that promotes the bringing in of those kinds of people. On the participation rate, one of the problems with our labor markets is young males. The participation rate for that group has not increased at all.
In what particular age group?
Roughly 18 to say 26 or 28.
Okay.
That group has not increased at all, and they have all kinds of issues. They're underskilled. They have decided not to get into the labor force. They have drug issues, all kinds of issues. That's why we'll need the immigrants to take their place.
One of the issues though with the younger cohort also is educational attainment. They are looking to enhance their skills. They're going to school, so that's one of the things that's keeping them from participating.
Because they're still in school?
Because they're still in school. But this is one of those things where if they complete that education, presumably when they come into the labor force, they'll be more productive, and that will help the economy as opposed to some of the issues that Harry talked to.
But that's
those
always
folks who are
been
just
true.
sitting.
I mean,
But
they've always been in school.
Sarah, I know you've had a particular focus in this. Isn't, though, as Harry described that demographic, and let's keep it at young males, isn't that younger cohort that we're talking about, when you compare the baby boomers that will be exiting the workforce and you've got that cohort coming into the workforce, that's by millions less than the cohort that's leaving. Is that right?
So the millennial generation is actually bigger than the baby boomers at this point. But what happens is the baby boomers are dropping off faster in terms of participation than what we're seeing in terms of the change of young workers coming in. And so when we look at what's going to happen to overall participation, so we still see it heading down just based on the demographics alone, which makes the strength of the labor market all that more important for bringing those prime age workers or younger workers back into the workforce and continuing to raise that labor supply.
Frank, I want to give you a chance to defend the immigration and the growth or the challenging growth of employment and finding good folks in a state like South Carolina, because that is an important element for growth and economic development. Correct?
Right, yes. But I'm going to answer my own question first. And that is...
Oh, so you're back in the classroom.
That's right, that's right. And that is, speaking of the classroom, old theories never die. They continue to be taught in the classroom. And that is the infamous Phillips Curve that says that with unemployment, you're going to get wage pressure, and we're not getting it. Haven't seen it, and so it's just not there. So what is happening in a lot of cases is the wages are not going up as much as companies are offering bonuses. And the reason for that is a bonus is a one-shot deal, whereas if you think your market's going to decline in 6 months, you don't have to take the bonus back. You had the money now. And if you offer a wage increase to entice one new worker into the firm, you got to give everyone in the firm the same wage increase. That could be pretty costly. And what do I do if this expansion does not continue? So that creates a lot of pressures on firms, and that's what's driving some of the wages. That's what's keeping them from rising as fast as you would hopefully expect. Now, with respect to the immigration issue, it's not just skilled workers we need. We need a lot of hard workers. We need a lot of people that have a work ethic. And what's happening is if you go by any construction site, you've got to speak Spanish. And if you go by any yard crew, pretty much, you've got to speak Spanish. And these people are working hard, long hours, and if they weren't there, it's not clear that the job would get done. So yes, we do need that influx of people in order to keep the wheels turning in South Carolina, certainly in the trades.
You know, one of the rallying cries that we hear over and over again, not just in this dialogue, but in companies, and I know you all have heard the same thing, and that's this stark difference between rural and urban growth, the rural-urban divide. Rick, help us understand that as it is and why it's so critical, given the fact that there has always been a difference between city center and farmland.
Yeah. So I want to get back to something that Frank said that quickly before we move on to that. Frank said something about wage pressures aren't there. I would push back a little bit and say wage pressures aren't there. They may not be as dramatic, and they're being held out by other forces. Part of the reason that the economies in North Carolina and South Carolina have been able to grow as rapidly as they have is not just because of immigration, but also because of in-migration, right? So we've got people coming from other states who are choosing to reside in here. But that has been where you've seen a big divergence in trends between metropolitan areas and rural areas. The people are coming here, they're coming to the metropolitan areas, allowing those areas to grow further. In rural areas, that's not the case. So when you take a look at where the employment growth is taking place, it's going to be taking place in those areas where we're getting the workers who are coming here, not just from overseas, but people who are coming from other places in the United States, and they're just settling in, and they're choosing not to live in those rural areas. Rural areas have a whole host of issues that need to be addressed. Amongst them, lack of economic diversity. So if you're a professional choosing to come into a region, you've got a trailing spouse, and you want to know that there's an economic opportunity for that trailing spouse or social opportunities for your families. There's a lot of issues that rural areas are facing right now, but it is a huge, potentially untapped pool of labor that we need to get back in the labor force to help our economies grow faster.
You know, I wonder if, and here it used to be Appalachian, used to be Boone and Blawnock was rural, not anymore. So I wonder if, and I know this can't be a one answer fixes all, but if the Carolinas got the transportation infrastructure investment robust enough, the policy dialed in right, would that go a long way to fix what this challenge between urban-rural growth issues are?
You know, I don't think so. I mean, we definitely need the infrastructure. Probably all states in the union need more infrastructure, but I don't think it'll do much for the urban-rural divide.
Then what would?
Well, I don't know what the answer to the question is, because in North Carolina, it's not only urban and rural, but it's Charlotte and Raleigh versus all the other metropolitan areas. I mean, they're growing so much faster even than Asheville or Greensboro, so that North Carolina is really being dominated by two particular metropolitan areas. I think a lot of people are going to have to move. I mean, I really do. That sounds awful. And I give speeches to some Rotary Club somewhere, and they ask me, what can we do for rural areas? And I say, some people are going to have to move. And it's an awful answer, but I really do believe that's true.
Sarah? I think that's been one of the challenges too, and not to dwell too much on the participation issue, but where we've seen most of the job growth, 80% of jobs this expansion have been added in the metro areas with more than 1 million residents, and yet they only account for about 56% of the population. And so we need to get those folks in rural areas moving to where the jobs are, but that's easier said than done when you look at the cost of housing in urban markets. So even in the Carolinas, which is nationally very affordable, it's still very difficult for folks in rural areas to make that leap, just given the cost of living, the fact that if they are receiving benefits, those are often tied to your local area, and it's tough to get those transferred over, and a lot of those folks can't afford to miss a single payment.
So Frank, you hail from the Low Country, and you could argue that Charleston is a a bit of a laboratory when you talk about urban-rural, because you've got Colleton County, south of Charleston, that is one of the poorest counties in the state and in the region, and you've got Charleston County, you've got Dorchester County, and these counties are on fire, not just in the Carolinas, but nationally. So what's the dialogue go on down there about how to fix these two barbells that are clearly out of balance?
It's the same dialogue that's been going on for maybe 100 years now. The urban-rural divide is not anything new in the history of the United States. I mean, rural areas, when they were dominated by farms, were always a little bit more impoverished. When farming declined, then they were just plain impoverished and there was nothing there. So what happens on these divides is people tend to look at the obvious differences. This county has a water line, this one doesn't. Therefore, if we get a water line, all of a sudden you'll have it.
We'll be competitive.
We'll be competitive. This one has interstate interchange. This one is not on the interstate. So what, build another interstate? I mean, so there's some fundamental structural issues on that. And part of it is the positive attractiveness of a growth pole. And so you've got an area that's growing, a Charlotte. People are migrating to Charlotte because the jobs are here. You got a Charleston metropolitan, that's Dorchester, Berkeley, and Charleston County, the Tri-County area. People are migrating there. We've got Boeing, we've got Volvo, we've got all of that going on. So where are you going to live? Well, you could find cheaper housing 2 counties over, but that's a long commute. And then you have the other issues about the amenities for the family and everything else. Are they there? So then you run into, well, if we build the amenities, then the people will locate here. But then now you have the question of where do you drive to get to your job, and then school issues. And not every county in every state can have the best school.
Do you think, and we're going to have to wrap up the urban work because we're going to run out of time, and I really want your forecast looking forward, but do you think it is going to get worse before it gets better? I'm looking out of the corner of my eye here at Harry because he had a pretty dubious answer. This is where you're going to have to move. Do you think it'll get worse before it gets better?
Sure. I mean, Western Kansas is population declines. I mean, this is when I lived in Kansas 30 years ago. This is not a new issue. You're going to get the growth poles where they are, and you're going to get the rural areas in a decline mode, and that's just the nature of the beast, so to speak. And you're changing demographic structures also. 19-year-olds are not going to move to a county that does not have a job, an IMAX or whatever else, you know. So
worse before it gets better?
Actually, I think most of the damage to the rural areas occurred during and immediately after the Great Recession. The Great Recession was particularly difficult on rural areas for 2 reasons. One is rural areas tend to be much more reliant on 1 or 2 large employers that are in that area. And just the nature of the Great Recession, everybody was affected. So nobody escaped. Oftentimes they lost their major employers. The second reason is that they're also much more reliant on government in terms of both government employment and government income as a source of economic growth. And during that recession was particularly challenging at every level of government. So revenues were lost everywhere, and they cut particularly hard. And those 2 factors really impacted rural areas more so. But that is largely behind us. Does it get better anytime soon? Probably not. But I don't think it gets much worse than what it is currently.
Harry, looking forward, what do you think North Carolina is going to do over the next couple of years? Do you think the expansion continues? Does the strength continue, et cetera, et cetera?
I do. I'm very optimistic about the economy certainly out 2 years. Beyond that, it gets cloudy, but I think for the next 2 years, we can expect strong economic growth, good employment growth in the state, sales growth, retail sales growth. All of those things I think will continue. I don't see any reason for it not to. I mean, what would cause it not to? I don't see any bubbles. So I don't see any bubbles bursting and bringing the economy to a stop. So I'm very optimistic about the state for the future.
Sarah, when you look out, and what do you see? And not just regionally, but also globally.
So, I mean, I think the expansion does have some more legs to it, and so we're looking for growth to continue for, at least the next 18 months. But I think when you look out for the rest of the year, things look really good. But 2019 is going to be a little bit more challenging, especially that back half where you do have interest rates rising. So that's beginning to put a little bit of a damper on a number of segments of the economy. So we're seeing it already in things like auto sales, credit card delinquencies creeping up. A little bit of a weight there to business fixed investment.
Will rates continue to expand with more momentum, or about at this pace?
So we actually think that you'll probably see rates slow in 2019. So we think given the tightness of the labor market, the fact that you are seeing inflation pick up a little bit, we think the Fed's probably going to raise rates a couple more times this year. But now that you have rates more along what is probably close to their sustainable level, we'll see those interest rate hikes probably slow a little bit. So not rise as rapidly, but still they're going to be higher on a level basis. And so that could create some headwinds, but that's part of why rates are being increased is to kind of make sure we don't get too overheated.
Yeah, too overheated. Less than a minute. Better times, more better times.
I agree. More better times. I'm right on board with Harry, except for one thing. The dark side on this would be bad policy. Bad policy is the one thing that you can't predict.
Fiscal, not monetary.
Both.
Really?
And so, but mostly congressional and presidential.
That's sitting to my extreme right.
But he can't legally comment, so we're all right.
So you got
him. So bad policy is what could do it. Internationally also. I mean, it just, this expansion is well placed. It's got momentum. It's got traction. So 1 year, sure. 2 years, sure. After that, I'm not, that's too far out.
Okay.
But 1 year, with good policy, we're okay.
Thank you. And unfortunately, you don't get a chance to respond. So thank you, Rick. You're a good sport. Harry,
I wanted to hear what you had to say.
Me too.
Thank you, Chris.
Good to see you, Sarah. Frank, thanks for being here. Until next week, I'm Chris William. Happy summer. Good night.
Major funding for Carolina Business Review provided by the Duke Endowment, Barings, Grant Thornton, the South Carolina Ports Authority, Sunoco, Blue Cross Blue Shield of South Carolina, and by viewers like you. Thank you. Promotional consideration provided by Business North Carolina Magazine. For more information, visit carolinabusinessreview.com.